Hi everyone. Before I start this video, make sure that you are a part of my Discord server. The link is in the description box below. Okay, so in this video, we'll be going over A-Level Accounting 2023 October-November Paper 2-3 question number 3. This is the paper 2, which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit given for this paper is 1 hour and 45 minutes. Since question number 3 is of 15 marks, ideally you should be spending about 17.5 minutes in order to solve this question. And in this video as well, we'll be attempting to solve it under 17.5 minutes. So without any further delay, let's get started. The directors of GA Limited provided the following information at 1st September 2022. So this is at the opening date. We are given information regarding share capital, share premium, and retained earnings. During the year ended 31st August 2023, the following transactions took place. At 1st December 2022, the company made a rights issue of 1 ordinary share for every 5 shares held at a premium of 0.20, and the issue was fully subscribed. So this is a premium rate, and our nominal rate is 0.50. Okay, so the condition here is that we are providing 1 new right shares for every 5 ordinary shares. So for every 5 ordinary shares we have, we'll be providing 1 new right shares. The first thing that we need to do is figure out our number of ordinary shares before this rights issue. So we need to refer to the value of our share capital of 60,000. And while calculating the number of ordinary shares, we just need to divide the value by our nominal rate, which is 0.50. This gives the number of ordinary shares to be 120,000. Now for 120,000 ordinary shares, we need to give 1 by 5 times 120,000 right shares, which is 24,000 right shares. Okay, so with this rights issue, the changes will be made within our share capital. So the share capital will increase by its nominal rate, right, which is 0.50. So in order to figure out the value, you just need to multiply the number of right shares by the nominal rate, which gives the value of 12,000. Then it also affects our share premium because we are offering these shares at a premium of 0.20. So in order to calculate the share premium value, we again start with the number of right shares multiplied by the rate of premium, which results in 4,800. Now, at the date of 1st January 2023, the company paid a final dividend of 4% on all shares in issue at 1st September 2022. Okay, and in this case, we are only providing the dividend on all shares in issue at 1st September 2022. But these right shares were not at issue on that date because they were only issued at the date of 1st December 2022, which means that we need to pay this 4% dividend only on the existing ordinary shares at the opening date. So our dividend amount is just going to be the value of our share capital, which is 60,000, multiplied by the rate, which is 4%. This gives the amount of 2,400. Okay, now at the date of 1st April 2023, the company made a bonus issue of 3 ordinary shares for every 8 shares held at that date, and the directors wish to leave reserves in the most flexible form. Okay, so the criteria here is for every 8 ordinary shares, we are providing 3 bonus shares. Again, we first need to calculate the number of ordinary shares. At the date of 1st April 2023, we have the starting number of ordinary shares of 120,000 as well as the new right shares of 24,000. So the total number of ordinary shares will be 144,000 in this case. So for 144,000 ordinary shares, we'll be providing 3 by 8 times 144,000 bonus shares, which results in 54,000 bonus shares. And remember that the bonus shares will always be issued at the nominal rate. So this will increase our share capital. And the increment is just going to be the number of ordinary shares, that's 54,000. That's the number of bonus shares. We multiply it by the nominal rate of 0.50 and get the value of 27,000. So our share capital will be increased by 27,000. But also remember that the bonus issue will be funded by our reserves. So the very first reserve that we have to utilize will be our share premium. And remember, at that date, the share premium will also be increased by 4,800. So that's an additional 4,800 right here, which means that the available fund within our share premium is 21,800 plus 4,800, which results in 26,600. So in order to fund this 27,000, share premium will be utilized, which will fund the value of 26,600, and the remaining amount will be funded by the retained earnings. So the remaining amount is 27,000 minus 26,600, which is 400. Okay, then at the date of 1st June 2023, we paid an interim dividend of 0.02 per ordinary share on all shares in issue. So all shares will be the initial shares of 120,000. Then we made the rights issue of 24,000 shares. Then we also made the bonus issue of 54,000 shares. This gives a total of 198,000 ordinary shares. So the interim dividend value will just be the number of shares, 198,000, multiplied by the rate of dividend of 0.02, which gives the value of 3,960. That's the interim dividend paid. Then profit for the year ended 31st August 2023 was 16,500. Alright, this is all the information. Now, we need to prepare the following ledger accounts to record the transactions. So we are given the opening balance. Any increment in the share capital will be recorded on the credit side. Any decrement in the share capital will be recorded on the debit side. Okay, so the first increment was due to the rights issue, where we gained 12,000 within our share capital. And this is the amount paid into the company's bank account by the shareholders, which means that we can include this amount of 12,000 as part of the bank. Alright, then there was also an additional increment of 27,000 in our share capital, and this was funded by share premium of the value 26,600, and of the value 400 it was funded by retained earnings. So again, since this is an increment, both of these amount will be on our credit side under the heading of share premium and retained earnings respectively. So 26,600 is being funded by our share premium, and the remaining value of 400 is funded by our retained earnings. That is all the changes within our share capital, which means that we can now calculate its closing balance. Since the opening balance is on the debit side, on the credit side, the closing balance will be on the debit side right here. So we first need to calculate the total from the credit side. That will be 60,000 plus 12,000 plus 26,600 plus 400, which results in 99,000. And since we do not have any other items on the debit side, that will be our closing value. We also need to show this closing value as the opening value in the next period. So that will be balance brought down with the same value of 99,000. We're now done with share capital. Now we need to repeat the same process with share premium. Since share premium is also part of equity, any increments should be recorded on the credit side. Decrements should be recorded on the debit side. Okay, so the first increment towards share premium was due to the rights issue. It brought in 4,800 to our share premium. Since this is an increment, it goes on the credit side, and this is the amount that the shareholders deposited into the company's bank account. So we can write this under the heading of bank. So for bank, we have 4,800. And then also remember that the share premium used the amount of 26,600 in order to provide for the share capital. So this causes a decrement within our share premium. So this will go towards our debit side, and we can write this under the heading of share capital, since this amount was used to fund for the bonus issue. So on the debit side, we have 26,600 under the heading of share capital. And there will be no closing balance for this, since we utilize the entire amount within our share premium to fund for this bonus issue. So the total from both sides will be 26,600. That is all for our share premium. Now for our retained earnings, again, since this is a part of the equity, all of the increments will go on the credit side, all of the decrements will go on the debit side. Okay, so the first change in equity was due to the dividend payment of 2,400, and this will definitely reduce our retained earnings. So this has to go on the debit side, and since we are paying our dividend to the shareholders from our company's bank account, we can include this under the heading of bank. So on the debit side, we have bank with the amount of 2,400. Okay. Then on 1st April 2023, there was a bonus issue, and for this, retained earnings funded 400 into the share capital. So again, this 400 will reduce the retained earnings balance, and we can include this under the heading of share capital, as we did for the share premium account. So within share capital, we provided 400 for the bonus issue. Then we also have the interim dividend, which we paid out of the retained earnings. Again, this is a payment, which means that our retained earnings will now be reduced. So we need to include this amount on the debit side under the heading of bank. So 3,960 as bank. Then we are also given the profit for the year, which was 16,500. We can include this under the heading of statement of profit or loss, since that's the statement utilized in order to calculate this value. And remember, profit for the year is always added to the retained earnings, which means that this will increase our retained earnings value. So this goes on the credit side. So that will be statement of profit or loss with the amount of 16,500. Yeah, that's all. Now we can calculate the closing balance. Since the opening balance is on the credit side, our closing balance will be on the debit side right here. So we first need to calculate the total from our credit side. That will be 32,600 plus 16,500, which results in 49,100. That's the total on the debit side as well. And in order to calculate the closing balance, we need to subtract all of these from the total. So that's 49,100 minus 2,400 minus 400 minus 3,960, which results in 42,340. We need to include this closing balance as the opening balance for next period with the same amount of 42,340. That's all for our retained earnings account. Let's move to the next part. Now we're given additional information. J Limited currently operates a manual system of bookkeeping, and the directors are now considering introducing a computerized accounting system. We need to see 3 disadvantages of introducing a computerized accounting system. So the very first disadvantage is that installation of the computerized accounting system can be expensive. Let's write it down. Installation of computerized accounting system can be expensive. Then the second disadvantage is that since we are introducing a completely new accounting system, there needs to be some sort of staff training, and that will definitely increase cost. Let's write it down. May involve extra expense in staff training. And the third disadvantage is that within computerized accounting system, data might be vulnerable to hacking as well as viruses. So data may be vulnerable to hacking and viruses. That's all for the second part. Now for the third part, we need to state 3 ways in which the security of data in a computerized accounting system can be assured. Since we're talking about security, the very first thing that can be done is data encryption, so that anyone that can get their hands on data cannot really comprehend it. So data encryption. Then the second thing for increasing security would be a strong unique password protection, so that any other outside parties might not get entry into our computerized accounting system. So strong unique password protection. Then the third way to secure our data would be installation of any virus protection software. So installation of virus protection software. That is all for this question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.